Let's welcome on board Pankaj Pandey as well and find out what he's making of the market and what are the stocks that he's got on his radar. Pankaj, hi, morning. Good to have you on the show. Let's first talk about the oil sensitives because they are the one which sort of really held the market in place yesterday. I mean, be it paint companies, OMCs, all of them a bunch. But do you think that this was just a knee-jerk reaction because crude has been seeing a steady decline for past 3 months now?
Yeah, hi, good morning. Thanks for having me. I think on the crude oil front, volatility is going to be there because ahead of US elections, largely if you look at both the candidates are at extreme positions in terms of the views. But in Trump is for pitching for nearly 3 million barrel kind of increase in the oil production. And coupled with the fact that the Chinese economy is not doing so well, which is the largest incremental buyer, I think crude is expected to remain soft. Now, while the marketing margins are expected to sort of prop up given the softness what we have seen in crude, but the refining margins is something which needs to be watched for. But I think structurally, some of these downstream and upstream companies are shifting their business model towards the renewable energy side, and which is what makes them attractive. So I think any kind of a weakness there should be used as an opportunity to look at some of these names.
Okay, fair enough. That's the view coming in on some of the crude sensitives and important to monitor, largely on the back of the way we're seeing crude oil prices as well trending. But other than that, what's the outlook when it comes to Zomato? I'm wondering, Pankaj, if you have a take, because we've got the stock that has been gaining traction. There's a recent or a report that's come out today talking about the rapid retail consumer transformation as well. And the company as well has been taking a lot of steps in this way. And how are you tracking it, given that now when it comes to quick commerce as well, there are a number of players that are trying their hand at it. So the competitive intensity is also building.
So we don't track the stock, but yes, whenever the competitive intensity sort of increases, generally the tendency is to sort of compete on prices, which again is not really a good thing for a segment to be into.
Okay, fair enough. That's the view coming in, not really tracking that one. But we were also having a pretty interesting discussion around aviation, SpiceJet and Interglobe Aviation. And it seems like it's very parallel views coming in, a preferable view on Interglobe and reduced rating from brokerages on SpiceJet. How are you reading into this?
So I think actually there's not much of a comparison to sort of do because Spike that we know is sort of struggling. So from that perspective, I think Interglobe becomes the sort of obvious choice, and I think overall number of flyers are expected to sort of keep on growing. And with crude being softer, I think Interglobe obviously tends to sort of benefit from this.
Bunch of other names which are going to be in focus. Of course, there's Interglobe Aviation versus SpiceJet that we've highlighted. There's Chola Finance as well. You've got a Goldman Sachs upgrade coming in. They've initiated a buy, target price of 1786 on this one. There's AU Small Finance Bank, wherein Goldman Sachs again has initiated a buy, target price 831. Zomato, there's a JP Morgan upgrade. They've maintained their overweight, up the target price all the way to 340 now. And then Zaggle, which has entered into an agreement with Blue Star as well. So that's going to be the other stock which is going to be in focus. But just talking about Pankaj, now that we're stepping into the festive season, at least here in Maharashtra with Ganpati over the weekend, wanted to understand whether you see any sort of consumption revival kick in, because going by the passenger vehicle sales data, there seems to be a bit of a slowdown for sure.
So I think on the auto side, if you look at it is the two-wheeler pack which is looking a lot more better with prospects of double-digit sort of a growth. And I think PV, while the volume growth is expected to be softer, overall sense is that the premiumization leg is definitely going to benefit key players like, say, M&M, which is where we have a buy on. Otherwise, from a consumption perspective, what we are liking is something like, say, Saragama, because company is expected to sort of deliver 25% kind of a growth in their core business, which is music licensing. Then they are looking to sort of do a capex of nearly 1,000 crores in terms of buying new labels. And I think the overall old labels sort of command good margins of 75, 80 odd percent. So I think this is one company which continues to do well as and when people sort of consume a lot of social media. I think this stock tends to sort of benefit from that.
Okay, stay with.
Suddenly, PSU stocks are showing signs of a struggle and a pause.
So, Nikunj, if you look at last 1 year, most of these PSUs have done extremely well. Look at across segments, be it the companies in the defense side or even on the power side. I think what you're clearly seeing is more of a sector rotation panning out, and our sense is that some of these PSUs are changing for better structurally. I mean, be it banks. From a corporate lender, their book is quite balanced. Similarly, when you look at power PSUs, they're looking to sort of change their business model from thermal to more of renewable energy going forward. I'm not really surprised with some of these PSUs taking a pause for some period of time. Yeah, I think these will be a period of time when one can accumulate. You can't really expect a sector to sort of keep on topping the charts all the time. So some bit of a consolidation correction, price and time correction should not be a big worry. So from that perspective, structurally we are not negative on any of the PSUs, including the defense PSUs, which have done very well.
Just up until recently, we were talking about that outperformance that is continuing, and then, of course, a little bit of a pause in the rally. Where is it that you stand when it comes to IT?
So IT, we are not really that so bullish, largely because, see, one, you have elections, US elections pending up, and both the candidates have divergent views in terms of the tax rates. So, for example, Trump is looking to sort of lower the tax rate to 15 odd percent from 21, whereas Harris is looking to sort of increase it to 28 odd percent. And I think there is still not very enough clarity in terms of the kind of impact AI is going to have and some of their business models. Even when you look at the recent analyst commentary, I think near term or for the next 1 or 2 years, you're really not seeing too much of a bump up in terms of discretionary spending. So with that said, and with 8% kind of a move already coming because of the prospect of rate cut in this particular last month. So I think IT, I am not really going to sort of chase more. So largely the focus is going to be domestic cyclicals, unless you have sectors like pharma or some other pockets which are looking better. Otherwise, with that kind of uncertainty, I would not suggest to sort of chase IT.
IT index snapped at 6-day. How you're looking at some of these sugar stocks? They have been in the spotlight of late with positive news coming in, but that's sort of the only time that you actually see traction building up within the sugar space. Do you believe that it merits a relook?
I think, bulk of the overall re-rating of the sector has already happened because a lot of these sugar stock used to trade at mid-single digit kind of a multiple, and that went to a lower double digit kind of a multiple. So while there is definitely a better outlook in terms of the blending ratio going up to 20%, but I think the best of the sector is already behind us. I think longer themes in terms of EV looks a lot more stronger trend compared to blending, which is going to happen in petrol and now in diesel also.
Pankaj, I'd like to shift focus and talk about the fintech and consumer tech companies. What has changed there? These stocks are flying as if there is no tomorrow.
So, Nikunj, we've not been covering a lot of these new age companies, largely because so whenever you see these stocks in terms of price to sales multiple, so I think the comfort will only come when you have a very strong opinion in terms of the kind of profitability which is going to pan out over a stronger period of time. And we have other options or better options available in the market, so which is why that is one space which you have not been chasing for a good period of time.
Fair enough. That's the take. Pankaj, going to let you go on that note. Thank you for joining in and sharing with us your take on the market.
If you like this video, then like, share and subscribe to ET Now.